Have with me Marshall Marangola, who's one of our corporate mergers and acquisition lawyers, who also has a specialty in healthcare, and behind him is Spencer Stevens, who's also an M&A lawyer and put the deals together. As I'll tell you in a minute, I'm the guy that you call when deals start falling apart. So what I know about putting things together, I've learned from watching them fall apart. In the back of the room is David Gorski, who's our IP lawyer, who's going to be giving a presentation at 1 o'clock. It's going to be more specific. I think whether choosing a lawyer, choosing an advisor, choosing someone to listen to, it's important to know who they are, so how to evaluate their information. So let me tell you a little bit about myself. I'm an expert in fall downs, not startups. For 35 years, I've been doing business bankruptcies, business litigations. It's evolved into just fixing problems, whether the deal goes sideways, whole company goes sideways, or someone you're dealing with. The similarity, so I'm not an expert on what succeeds, but the similarity is money's precious, decisions have to be made, you can't freeze up, you have to move forward. You have to decide, what decision do I have to make today? What decision can I defer? Is it a branch in the road, or am I just going down a path? So that's my background. I probably practice in most industries you've heard of. When the oil and gas bust hit in Houston in the 80s, I was there. When the savings and loan real estate bust hit in the 80s and 90s, I was there. The dot-com bust. Every industry that has had a downturn, we've been involved in. I am, however, a lot like you because I'm working with my wife's startup. My wife, Mariska Nicholson, started her skincare business, all natural skincare, olive oil based, and olive and M, and so I handle the business side of it. So I spend a lot of time on spreadsheets, a lot of times trying to convince our seed investors that it's not a dream, but there's a reality to what we're doing, and I'm happy to report I think it's getting ready to explode, because spas and salons are starting to reach out to her and buy the product. So we thought we were an online company. We are, and then we pivoted and found out that estheticians were our best customers. So that's just a little background. One other part about my background, which has informed the way I practice law, is I was a Dallas police officer after I got out of college in the 70s. Worked nights in a hard area of the city. I learned a lot. So what I've been describing to you is conflict management. That's the common thread. So, with that as background, I guess the first thing I can address is, when do you need a lawyer? How many of you seen the movie Social Network? Just about every. If you haven't, watch it. If you have, watch it again. And watch it thinking of, what's the law? What traps are these people falling into at the beginning of an idea among college students? Well, the first thing you need to be talking about is a non-disclosure agreement. You need to protect your ideas. The law is not really clear on at what point your idea is protectable. I'll give you an example. It was my wife's idea to start the paint park, the Hope Outdoor Gallery, off of Lamar, if you know the graffiti park. But it was her friend, who runs the organization Hope, that got an introduction to the owner and made it happen. Which was more important, the idea or the follow-through? Without the idea, there would have been no park. Without the follow-through, there'd be no park. Social Network had a similar thing. The brothers said, this was our idea. And if you watch the movie, he kept saying, I didn't use any of their code. I didn't use any of their code. And if you notice that movie, they seem to be sitting around conference rooms and talking. They're lawyers taking depositions in the middle of litigation. So one thing you can learn from Social Network is protect your ideas. Number two, if you remember somewhere, I can't remember the name, but at one point he offered 20% to the guy that was going to market. Fortunately for him, he grew so successful when everybody sued, he could pay them off with a few $100 million and everything was okay. But that's the kind of things you need to start thinking about. How do I protect my ideas? And be careful about giving people things. And I don't even know that they put it in writing. The movie wasn't clear. They just talked about it. They're just guys. So that's the first thing I'd urge you to be cautious about. So the first place where I think You may not even need a lawyer. NDAs are all over the internet. They're not particularly complicated. Actually, there's a billionaire in town that was talking to a friend of mine, and he sent an email. It's a secret. If it's no longer a secret, it's not bound by the NDA. My IP lawyer probably have more to say about that. But the importance is to swear people to secrecy. I'll get to what that means in a minute, because a lot of what happens in the law is all you're doing is getting a right to sue somebody. If somebody wants to run over you, if someone's got the leverage, and you've got the legal rights, it's still expensive. It's still a battle. But it's better than not having the legal rights. Formation. When you decide to form an entity. Now, I've known people that are pretty sophisticated about that. Some people, it's your own idea. You're the only person. You can go online, you go to the Secretary of State, and form your own limited liability company with a piece of paper. Because there's only one of you, and if you have any disagreements, you can, give each other a drink and find out. But what happens if there's two of you, or three of you? What if one of you has the great intellectual mind to create the technology or the IP, and one of you is going to run the company, and one of you is going to put in the money? That's at a point where everybody's singing Kumbaya. It's kind of like dating. I don't know how long you've been in a long-term relationship, but you realize how you don't see any of those faults at the beginning that you see a few years later, and you have to be careful that you just stop seeing just the faults, just the way you never saw the faults. Well, it's the same dance without the intimacy, I hope. So what you've got to do is you've got to ask yourself, what is the deal? What if this happens? What if the guy that's running the business, or the woman that's running the business, really is no good at it and is holding your company back? What do? What if your money starts changing the deal, starts saying, no, I don't want to put the money in, you're not doing what I said you're going to do? What if the IP turns out to be a limiting factor and you need somebody else? Those are all questions that you need to sit down and walk through and have the hard, come up with the hard answers. There's a lot of answers. They're all very fact specific. And the lawyer's job in that case is to help you think through, what if this happens? What if this happens? What if this happens? Now, some lawyers can do that to infinity, but it's up to you to decide what is really a risk in my business and what is just a theoretical risk, along the lines of a volcanic disruption in the middle of Austin. I mean, where is the risk? You kind of have to work with the lawyer to address the real substantial risk, and the lawyer can educate you on that. And I'll tell you right now, lawyers up front are a whole lot cheaper than lawyers on the back when you're fighting litigation. We've got a lot of transaction clients. Out of, I don't know how many of you are with one other person, you got a 50-50 partnership. I want to talk a little bit about that. I represented two old men that for 46 years they've been in the real estate development and home building business. They were the third biggest home builder in the United States, but they're just two guys. They didn't really set up a big corporate structure. In the 80s, we had the first deflationary recession. So inflation, if you hold on to real estate long enough, if you can, inflation will pull you out. Well, it was deflationary. So they were dead in the water. And I went through a lot of very difficult meetings with them, and they're the most two different people I can imagine being partners, and yet they'd survived for 46 years. There's a chemistry there. And I think one of the reasons why they survived, because they were successful, and it's a lot easier to be happy with each other when you're successful. But you got to be aware, because you'll get deadlocked. What's the solution for one person wants to do one thing, one person wants to do another? You just have to be aware of that. So I'll give you another example. Two guys bought about 150 food franchises that were in trouble, and they thought they could turn them around. One guy was like the best assistant manager in the franchise history, and the other guy was kind of a country club guy. Very, very different people. And I keep going in the conference room trying to work them through the mess, and they just kept beating on each other. And then it occurred to me, how am I going to get these guys to break the logjam? Because like startups, fall downs, you have to keep moving. You have to take big problems, break them down, and address the ones you have to address today, identify the ones you need to address tomorrow. So I walked in and I said, I finally figured this out. I've been more amazed by people who have been partners for 20 years than I am amazed by people who can stay married for 20 years. But there's an inverse correlation. Because when you're married, when you stop screwing each other, the problems start. But when you're partners, when you start screwing, the problems start when you start screwing each other. So let me say that again. In marriage, the problems start when you stop screwing each other. In a partnership, the problems start when you start screwing each other. So I told them, stop acting like a married couple, stop screwing each other, and let's get to business. That's just an illustration of how when things get tough, and you don't have to be falling down, you can be where you are. You see where success is. You're not there yet. You may not have the capital. So if you're going to go into that partnership, you really have to believe in the strength of that relationship and figure that out. I wouldn't have done that in any prior relationship I had, but it just works. Let's talk about contracts. You can have a contract by email, even if you don't realize it. You make an offer, someone says agreed, doesn't matter whether it's an email, it's a contract. There's a few exceptions to that, but in a world of generally making deals, you're bound. And if it's not clear from your email whether you're bound, and decide whether you had a contract. And you don't want that to happen. So the first thing I would say in emails, if you're using them or any social media, if you're using them, make a point to say, we're just talking, we don't have a deal until we put it in writing. Think about how you use your language so that you don't say something clearly and unequivocally when you could say, for example, I sent a letter, I'm buying a banknote on behalf of a client who wants to take over the note. I said, this isn't a binding offer, but we're in a hurry, so I want to throw out some deal points to see if we've got something to talk about. We're not going to have a deal. If we have a deal, it needs to be documented, signed, and agreed to. So just think, in everything you do, be careful not to get trapped into a contract that you didn't intend. Conversely, you do want your contracts in writing. And they don't have to be 50, 60, 80-page contracts in most cases. And again, lawyers and businesses can take a pretty straightforward deal with 5 deal points and turn it into a big document. The reason why lawyers do that is they're dealing with the what-ifs. But when I look at banking documents, I'm looking at representing a borrower in bankruptcy, and the bank sends me their 400-page loan agreement, I can assure you within 15 minutes I can spot anything that really matters in that document. So you have to have a balance between this crazy long document and making sure things are protected. But you need to get it in writing. And I want to reiterate something. When I've dealt with a lot of, when a company falls into distress, it becomes a crucible to see all the problems, business problems, mistakes they've made, and legal problems they haven't addressed. Intellectual property, for example. Be sure you got a right to it. I'll give you one example. Maybe it's changed. I had a friend that was using topwater lures, and he's selling them over and going to sell them over the net. Set up a Facebook page, said topwater. Facebook says you can't use the name, someone already has it. Well, he had the business. He had the superior rights name, but Facebook didn't care. All they said, first in time, we'll kick the second one off, get a lawyer. That's what he had to do. Then he had to threaten the guy because he had the trademark. But he used it continuously, so all of a sudden he's kind of in the muck. But be sure you have your intellectual property rights so that it doesn't happen. I've got to digress 1 minute and talk to you about artificial stupidity. You know, we talk about artificial intelligence, but my wife wanted to change something on her Pinterest account, and she got an automated email back saying, you can't make that change, that's a trademark name. Now, I don't know how Pinterest tracks this. I don't know. And so she says in the trademark, says, it's my trademark. I said, no, we're sorry, you can't use this. And then she gets another email and says, someone's trying to use your trademark. So she answers that email and gets it all fixed out. I don't think there's a human being in that process. But this is the world that y'all are living in all the time. Even though you might have rights, beware that on social media, they're not going to be the adjudicator of your rights. They're just going to throw off the second person and force you to get a lawyer. Back to contracts. Let's say you're not using a lawyer. you're having a contract with somebody, a supplier or someone, read the contract. I mean, it's not like the software license you click on, it says, I know I'm giving away all my rights. I mean, read the contract. And if you don't understand it, it doesn't cost much to call a lawyer and say, what does this mean? And I will give you an example of that. My wife formulated her formulas for her products, but then she had to take it from an amateur formulation and take it to a lab and get it to be where it would be shelf ready with no preservatives, good shelf life, and that every ingredient in it would have some efficacy. And she worked with one chemist, but he didn't have a lab. She took it to another lab, and they said, yes, we'll do this, but the contract says we own your formulas and we'll sell them to you someday in the future at some agreed upon price. That's not a deal. So I found out that's really common in that industry. So we went to another lab, and I went to him, I said, how about after we buy so much of this product from you, you give us a license? In other words, what you're trying to do is, you're doing this upfront work, this lab work, and you want to be reimbursed for it, and they agreed to do that. So look at your contracts because they matter. Equipment leases used to be notoriously bad. Look at the renewal on computer leases. There's a company, it was a publicly held company in the United States. I saw them on the front page of the Wall Street Journal right before they collapsed, bragging about all the revenue they made by doing 3-year computer leases, but people kept renewing them for the 4th year because the fine print in that made it a 4-year lease whether you liked it or not. I had an astute client, a young woman running a business, and you had to give them notice between 180 days and 120 days that you didn't want to renew it. Well, she did it, and it's still, they took the position, no, you have to renew the lease. What's wrong with that? Well, you've already paid for the computers. It's a finance lease. All that means is you're paying the same price for the value of that computer's for 3 years. They have almost no residual value after that. So 4th year, you're actually paying 25% more for these computers. There's lots of this going on. I can't even begin to explain all the different places that people have business models. And you may not need a lawyer. Just read it, understand it. Our law firm, it took us 2 years to agree to take credit cards because the lawyers on our side were saying, these agreements are crazy. They're putting all the risk on us if you screw up. Well, what did we find out? That's the way the industry works. Do we have a choice? Do we take the risk? We don't take credit cards. We're forced to take credit cards. We take the risk. But at least we understand that. We know it. So that's one thing you can do. Some contracts you can't negotiate. They're form contracts. They're big companies. Your only option then is enter the contract or find another source. Or play the two off against each other. You might be a small client today, but if they believe you're going to be a big client tomorrow, maybe they'll talk to you. Other contracts are negotiable. I think it's important when I write contracts, and the lawyers in this room the same way, there's no reason to avoid using plain English. There's no reason to use legal jargon. I've been up against lawyers, and again, on these 80-page agreements, and they're sending drafts back, and they're changing if to this, to that, and it's just getting mind-numbing. If I really want to piss them off, I do a global search for in the event that and change it to if and send it back. Because there's no difference. But you can't get probably even my partner back there, probably can't get him to take if in the event that happens. If. Jargon is because you're trying to catch the other side in a trap. You might be successful once, twice, 3 times, but I don't think that's the way to do business. I'll get back to that in a minute. Picking a lawyer. How do you pick a lawyer? The best way is through whether you have a match. Is a lawyer listening to you and hearing you? What I really liked about doing the bankruptcy work is I get to learn about my client's business as fast as they learn the law. And I tell them the law, and they tell me how that impacts their business. And out of that, we create a reorganization plan and hopefully save a business. So they need to speak clearly. They need to listen. They need to kind of know how you think. My wife's a creative. The way I talk to her is completely different than I would talk to somebody that's very analytical, because she's thinking spontaneity, and I'm sitting there carefully choosing my words. But what I found, it doesn't matter how carefully I choose my words, she heard something completely different. right? And that happens a lot. Do be really careful with words, not just with lawyers. If somebody is saying, well, I mean, let's watch how Giuliani keeps working this. Well, he paid her, but it was because of this, because I mean, just listen to specific words. And if you go back and hear what Trump's lawyer said, he never denied that Trump repaid him. His specific words were, the campaign did not reimburse me. Public money wasn't used. Restricted money wasn't used. So there's a little interesting story going on right now. If you listen to these people's words specifically, they can always say, I didn't say this, I said this. Same thing in business. When you're doing business with somebody, what did they say? So what I like to tell people is, get a lawyer that cuts off one hand. I learned this from one of the best lawyers I ever known. We are taught for 3 years of grinding law school to see both sides of every story. We can take any side and make the best argument. That's our training. Well, if I sit here and I tell you, well, on the one hand this, on the one hand that, and that's the end of it, what have I told you? Well, I've told you the risks, that's important. But what you need to all you do is cut off the hand and read what's important to you and give you a suggestion. I had a lawyer a few months ago, I had to come in and bail out a case. He said, I could do bankruptcy law, but I know nothing about real estate, and that's what I told the client. Well, how do you reorganize a real estate company just because you know the legal rules? The lawyer needs to know something about the business, and they're not going to know anything about your particular business. Did I get something from it? Is it clear? Did we accomplish something? That's what you want to look for. And if you don't have it, don't worry about hurting the lawyer's feelings. Go find another one. Now, lawyers are coming up with all kinds of different fee packages. And I've been a technology partner in a law firm for about 15 years. Law firms are not like corporations. They're not top down. They're more like sports teams. A good lawyer isn't necessarily good at management or at technology. So I've learned a lot about watching people use technology. And so I kept posing the question, why should we be efficient when we bill people by the hour? That's the number one suspicion people have of lawyers, because it seems to be a built-in conflict of interest. Well, one thing that happened as we got more efficient, our rates went up. Because the value of our business really isn't, our advice isn't by the hour, it's by the advice. It's hard to grab on to how to put the value in that. This is how old I am. I was in a restaurant in Dallas and had a client that said, you know, if this guy in New York doesn't wire that money in the next, he goes, no. So I literally went and got on a payphone in the restaurant, called the guy in New York, and I said, I just want you to understand, so there's no misunderstanding when the lawsuit comes, that you need to wire that money in the next 7 minutes or you lose your property. And he wired the money. I earned every fee I charged that client a year in one phone call. So what's the point? You need a relationship that over time it balances out. You have to have a lawyer that believes that what's better for his or her business is to do right by you, so you will refer more business. We'll see more alternative fee arrangements work out, but they're all basically, you have to come back to the notion of, if you're going to have a fixed fee, then the lawyer's sharing the risk with you. If you're going to have an hourly rate, you might win or lose depending on how complicated a deal gets. So the lawyers are going to price at a sharing the risk price. One other example, the first home I built, the architect says, yes, I can take a percentage, but I'm looking at your home and what needs to be done, and I think I can do it by the hour cheaper. It was 50% cheaper. So this is real hard as you start seeing the business develop. You're seeing a lot of law firms, including ours, expanding beyond the practice of law and having separate consulting firms. The lawyers don't do the consulting. We have to practice within a law firm. We have restrictions on marketing and sales. But so, for example, the new firm we joined has an entire HR consulting firm where your HR doesn't rise to the level of needing a lawyer, but you need a consultant, and you get tired of having to call 10 people to get 10 things. So we're going to start seeing, and already see, a consolidation of professionals which will benefit you. We are, in our office, we're negotiating with this group of wealth managers where we're putting together a team of everybody that you need to come into your company and really evaluate what they call the 5 pillars of strength. Not just your financials, your leadership. How many customers do you have? Do you have a customer that's 90% of your work? Do you have your IP protected? Now, if you had a law firm do that, it gets expensive all the way. So we are creating this group where it'll be a flat fee, come in and do an analysis, whether it's for your exit strategy, or whether it's just knowing what you want, or it might be for investors. Really, you also have to ask yourself, who is the lawyer representing? And I'll go back to 2 or 3 of you go into a lawyer's office because we want to do a deal. Who's the lawyer representing? You have to get that clear. You have to get it in writing. Ideally, all 3 of you want your own lawyer. Often that doesn't happen at the beginning. There was a major law firm in Houston sued last week because the lawyer represented 2 guys in a deal, but he had been the client, the lawyer for one of them. So when the other one comes in and says, fine, I trust you, things didn't go out, guess who got sued? The lawyer got sued because after all, it turns out no matter what you said, you're his lawyer. So you have to be really careful of that. If you're jointly using a lawyer, that lawyer, if they're good, is not disclosing and advocating the positions you can take out here to get to a deal. They're taking what you've asked them and said, I want to put a deal together. What happens, what if this happens, and stays neutral. It is better to have your own lawyer. You might get a better deal. And another example, in the go-go days of the dot-coms in the late 1990s, there was a legal model. The California firms did this a lot, and they moved into Austin. They said, okay, you hire us, and we'll charge you about 50% more than other law firms, but we're the best. And that model took off. Living.com was a company that Andrew Busey started. Guy had a business plan to sell furniture over the internet in 1999. He got $80 million in capital, convertible loans, Silicon Valley. The lawyers signed up. Well, they were the venture capital lawyers. And although technically they're representing the company, guess where their loyalties ultimately are? That one of those firms collapsed spectacularly because of the obvious conflicts. But for years, and I had a pretty sophisticated businessman who says, I'd love to use you, but these guys, they charge a lot, but they're bringing the money to the table. I said, who do they represent? Well, when you're going, you think, well, I don't really care, no problem. Well, let me tell you a little bit what happened to Living.com. I was representing everybody except Andrew Busey, because he and I disagreed on the efficacy of his idea of selling furniture on the internet. And I knew something about the furniture business and the distribution network and the disruption he was causing. But that didn't matter. I mean, I'll still see him. He's been in several very successful ventures since then. But what happened to him is they said, hey, kid, we'll bring in a CEO. We'll run the business. Well, they got a guy who was a headhunter. He wasn't a CEO. He literally locked himself in his office, completely frozen, not knowing what to do for a year. But they're the guys that brought that afoot to count them as sales. So Andrew gave up control of his business, brought in lawyers who were not talking to him, and the whole thing just collapsed. Issues. So be careful about who your lawyer is. Be careful where the money's coming and who they are. A couple more points, and I'll take questions. Litigation. If you get caught in litigation, often people mistake assholes for good lawyers. I mean, when you're doing a deal, you want a smart, reasonable lawyer, but man, when you're pissed, you want that asshole. Well, let me tell you, you don't. This is what I learned from being a police officer. Got a radio, really what you want the lawyers to manage the conflict. Match it, meet it, difficult legal battle, and the other side's pleadings came across by email, and I heard my paralegal, Mama, there's no guns here. All they are just not afraid. And some are. Some just want to work a deal, get some money, work a deal. But others know what the law was, he tripped up on it. You want somebody's loyal. Don't get strengths and weaknesses. She's got 5 people. Visionary, it's her product. She's good at it. She has good instincts, but she hates reading a spreadsheet. She hates this. She doesn't like to actually go out and sell. So when I see failing businesses, okay, who's keeping the books here? Who's keeping your head out of the clouds? Who's telling me where the reality is? I prefer that person not be the leader, because you need your leader to be visionary, but they need to be right at the elbow of the leader. Because what we want to do is take that reality and turn it into the vision. So what does that have to do with using lawyers? The most frustrating thing is having someone at the head of the board table say something and everyone else nodding their heads. Then you know, I'm not getting good information. I don't know how to help you. Don't be a victim. You know, you think clients pick lawyers, but the first thing I look for when I'm picking a client is, when you tell me your story, do I hear you owning up to your part of it? Do I hear you taking and pointing fingers at me next? So don't he told a story. Outright fraud. That's pretty extreme. But you surround yourself with good people. Is improving their weaknesses? No. You improve their strengths, you replace their weaknesses. Move them, shift them. And when you do that, what does that have to do with a lawyer? Well, if you got somebody weak, then that's going to start creating problems, and that can create legal problems as well. I'll tell you on the finance side, I can't tell you how shocked I have been at seeing how much embezzlement there is. Not necessarily the startup, but when you have highly paid executives and low paid financial people, the number of people who never committed a crime that find a way to steal your money is pretty outside every year or so. Come in and look at your books. I've been building my own spreadsheets for 3 years, and although I've been a lawyer cross-examining people who wrote credit spreadsheets, it's real simple to be a lawyer. What's this number? How'd you get to it? What's this number? How'd you get to it? Building them, I found all the different ways I could use formulas and make things up, even by accident sometimes. So be careful on the financial side. There are a number of people that just will get sticky fingers. Measure the character of people you do business with. It doesn't matter whether you like them, but measure their character. If I just had a client in a steel company in Ohio. He's selling to these guys that kept threatening to sue if he didn't close the deal, like up front. Now he's got a deal where there's an ongoing relationship back and forth for the next few years. Now, if I were cynical, I'd say that was good for me because there's going to be litigation for sure. But why in the world would you do a deal with somebody that's already threatening to sue everybody in the world who won't close a deal when you're not even bound by the contract yet? If people try to sell you something that sounds too good to be true, it's too good to be true. I worked Ponzi schemes. I talked to the victims. And I said, what did you learn? Well, if it's too good to be true, it probably isn't true. I said, but you knew that before you invested. My advice to you is a lawyer with an insurance policy. Because if the lawyer missed it, at least you got somebody to sue. Be careful who you do business with. I won't mention, yes, the assholes win sometimes. Sometimes they even get to the White House. The way Donald Trump's done business, he could never go back and do business with anyone he ever did. But most people like that will succeed, and then fail. On a philosophical level, is that how you want to waste your life, being that person? You want to do business with them either. When I've seen companies, I've seen a lot of people that have failed on one particular company, but they have what it takes to get up and do it again. And the people I see over and over doing it again are transparent. They're transparent with their creditors, they're transparent with their investors, they're transparent with their partners. So if they fail, although everyone's pissed when they don't get paid, it doesn't take long for people to evolve through that and say, well, at least he or she didn't lie to me. It was the business idea, it was the market, it was the economy. And the same people got a contract and was off and running, and now he's a multimillionaire again. Why? Because he always had character, and he lived up to his word, and he didn't try and screw anybody. And this all sounds really soft, but I'm telling you, this is a way to reduce the need for lawyers. Okay, I want to talk just a little bit on the financial side. I find that I have no finance degree, but I found a lawyer. I walk in, and I'm talking to the numbers guys, and they're talking about EBITDA this and revenue this and leverage this, and I say, hold on a minute. This is when I do my cheap detective routine. I said, I don't have a finance degree. But as I understand it, I don't know the difference between revenue and cash. Let's talk about cash. Leverage is only leverage when you borrow money and you make money. When you lose money, it's called debt. So let's call it debt. And let's call everything else an expense. Question number one, do you have the cash to pay your debt? So many people take their eyes off their cash flow are wowed by every other number and every finance, every metric. Nothing matters more than cash, so much so that I can help reorganize a company without knowing much more about it at the start than if it's got enough cash to survive. So I'm not telling you anything you don't know, but focus on that. Go out, income statements are one thing, look at the cash. I knew a group of some of the best and brightest people from the airline industry decided they were going to do a travel website before there were any. Orbitz beat them out. Orbitz got bought by $1 billion. They collapsed the next week. They were that close. They're probably better. They just got beat out. I don't remember who bought Orbitz or whether it was ever really worth $1 billion. Another thing that small business people tend to do, and it's hard to avoid, is they mingle their personal accounts with their business accounts. Even in partnerships, big partnerships. Things aren't going well. You talk to the general partner, you found out the general partner borrowed money or spent money on another project. Well, the general partner turns around and says, yeah, but I haven't been taking the money I'm owed. Or I put this money in, and all of a sudden you're in a big accounting mess, and you're a big litigation battle. In fact, that's what you do in partnerships. The first thing you do is get an accounting of money in and out and net, see whether you actually lost or gained money. So just because somebody's taking money out doesn't mean they're correct. It means somebody you don't want to do business with because you get into a mess. So let me give you an example. You have your company account, you have your personal account. The only money that should come out of your company account and your personal account is a transfer to you, not to pay your bills, not to pay something unrelated, to you, and then pay the bills. Now with electronic banking, it's easy. It used to be a payment in, but people didn't do it. Even in spite of that, you will find people use the wrong card. People, don't have the money where they need it. A product called Zero out of the UK that Carl Icahn bought into. Just e-trail it. Keep your stake, book it as, a distribution or capital contribution, but book it. So that pretty much is a smorgasbord of ideas. I know from the incubator you all are probably involved in many different things, but what do you think of? What questions do you have? What keeps you up at night? That's the first question lawyers should be asking, is what keeps you up at night? Yes, ma'am.
The one that's emerged recently is there is not a contract with respect to percentage of partnership owned. We know how much has been put in. There are some who were sweat equity for percentage. But should this end up making a profit as a company or be bought, there's no template for how investors will be paid off, whether it's as dollars or sweat equity going in. And the CEO looked at getting an attorney who would write up such an agreement, and it was like, well, it's going to be $10,000 to write up this. It's currently an LLC. Mm-hmm. And that just seemed like a whole lot of money that the startup doesn't have to spend while they're focusing on product and marketing and all. So is there not a generic template, but a more affordable starting point? Like you said, LLCs are real easy to form.
Right.
Been there, done that.
Yeah, when you.
So I don't remember the structure of the LLC, but there's no, I guess, distribution.
Well, the only thing I can say is it needs to get far enough along where it can afford to hire the lawyer. I don't know if $10,000 sounds like too much for that. It's hard to tell. But let me give you an example. The first question you should ask even before going to a lawyer is, what are the expectations of the people that put the money in? What are people's, do they match? Because if they match, that's just a matter of doing a document. If they don't match, you're dealing with a problem that you better deal with now. Because if you try and deal with
that's the biggest point. Because so I'm a corporate M&A lawyer. I sell businesses all the time, and one of the important things that Steve mentioned is, I've never sold a company that was crystal clean, that we didn't have to clean up. And so you need to clean this up now, because if you ever have an exit, it's gonna get messy, and it will have to get cleaned up at some point. So now is the best time to clean these things up. It's all depending on valuation. So you have to value the company, and the company can either be valued by its IP, can be valued by its business prospects, can be valued by its hard assets. There's a number of ways to value businesses, but that's the first step that somebody's gonna have to take. And we should never take investment from people without really understanding what they're getting in exchange. And so, that all comes to value, it all comes to your offering that you're making to your investors, and it needs to be clean, and it all needs to be documented. So whether it's through PPM, private placement memorandum, whether it is through your organizational documents, which in your case an LLC is going to be documented in a company agreement, or if you're in Delaware, it's called a limited liability company agreement, and all of that needs to be set forth in there. And because if like most startups that happen, you will have different rounds of funding that come through, and the original owners will be crammed down is the term, and so but you have to have a starting place, and so you won't be able to attract additional funding if your capital structure is a mess.
It's not that the document is complicated for a lawyer. It's the deal. So again, if you start and say, what did you expect? Because if you do really well, the people who put the money in and said, I expected to be an owner. And the owner says, oh, I'll give you your money back.
Right.
And at that point, you have litigation and hurt feelings. So, but the point is, let's take the LLC agreement, and I just read through my wife's again, one of my partners did. You need to understand what it means. That takes a little time. They're not complicated for us to write, they're complicated to understand. What if you need to go out and raise more money? What's that look like? So there's a number of those questions. You'll see these LLC agreements look really complicated because there's a lot of tax provisions in them. They become very important because of some IRS changes, even before the new tax law. So it's really hard to tell you about how much it would cost. But the first question is, do people have any understanding of what their expectations are? Was there an email? Was there a conversation? A multi-billion-dollar company for marketing, a company worth nothing? I mean, those are the things, it's worth it.
Right, because you want, optimism then at the end of the day.
Right.
Yeah, there's going to be a big pie, and you go, okay, so how did you plan to divide that pie?
Yeah.
That's
if it's worth money, people will fight over it.
Right.
I meant to say one thing. The contracts are only as good as the leverage you have. So when you're negotiating, ask yourself who has the leverage. Ross Perot was very famous at having young inventors come to him, and he would take half the business or 49% of the business and see if it succeeded. Then he could find something in his 300-page agreement to declare a default on and take the company. He always wanted to be a Green Beret, but he was a small guy, right? He's a very litigious businessman. What could the other guy do? Well, if his case was strong enough, there's enough money involved, he'd probably get a lawyer on a contingency. But short of that, you lose. Because one guy's got all the money to fight, one guy doesn't. You can't change it, but you can understand the leverage. And another way to say that is, who's most valuable to who? If you owe me attorney's fees and you really need me, I'm going to have a better chance of getting paid than if I'm finished. Because when a lawyer gets finished, the first thing the client says, man, that lawyer was brilliant. And a month later, the client says, well, I had a really good case. He's a pretty good lawyer. And then a month later, the client says, any lawyer could have done that. I had a great case. You have the same thing in your business. Watch your leverage. Documents are helpful, but really it's the leverage that makes the difference.
Yes, what are your thoughts on sites like LegalZoom and Rocket Lawyer and those kinds of places?
I think they're good for simple stuff. There's LegacyWriter.com is one I ran into to do a will, if it's not complicated. If it gets complicated, then you need to go beyond that. Now, LegalZoom, their model wasn't working, so now they're starting to have online lawyers.
Oh, yeah.
Who are they? How far are they out of law school? What do they know? I mean, I hate to say it, maybe I sound egotistical, but lawyers aren't generic. So it's really hard for you to evaluate whether you're asking something that any lawyer should know or you really need a specialist. It's a lot like medicine. New York Times Magazine for years would have this one-page story, a new story every week about someone that the doctor didn't diagnose, and it goes on for 2 years, and it's a medical scientific story until finally it got to the right person and discovered it was something else. And fortunately, it's kind of like that. So I'm more, if it's a simple document, some of those documents like a demand letter, really you actually need a form for a demand letter? Well, if you feel like you do, fine. But anything beyond the complications, anything complicated, I would find a lawyer that you trust through referrals. One last thing on picking a lawyer, you want to be a meaningful client to the lawyer. A lot of the really big firms in New York, if it's not $1 billion involved, you're going to get a second-year lawyer who's working from home in West Virginia. So get that sense. You call a lawyer and they push you down to the youngest lawyer. Well, you know, Marshall's been practicing, what, 7 years? 6 years? Damn good lawyer. Good value for the price. I think it's really important to find a lawyer who considers your business significant. A lot of law firms, including ours, are the same. My wife has investors coming out of the woodwork that want to invest when she gets to 10 million, or 20 million, or 30 million. She's already on their radar. So we want you to let you know, you hit this threshold, call us. She's deluged with that. But it has to be a good fit. So that's the best I can tell you. Do you have any other thoughts on LegalZoom or Rocket Lawyer?
This is just a general, go jump to another profession. I thought about that. I mean, you're trying to start a business. Your business is your baby. Let's pretend it was a real baby. Would you have your diagnosis done on WebMD, or would you go to an actual doctor? And would you go to just any doctor that your insurance plan